Hey everyone, Matt from Soundrolling.com, and thanks for joining me for this episode as I try and make more resources to better me and the sound community. So this one's all about income protection and life insurance. Kind of an odd topic to talk about, but being freelance, obviously, kind of very self-dependent on me physically being wherever I need to be to actually earn money. That's the kind of very definition, I guess, of self-employment as opposed to a business. And so making sure I'm kind of covered if I go skiing and break both my legs is becoming more and more of a a kind of important thing, especially further down the line. Now, what first got me thinking about this, apart from my muddled speech, is basically just getting older. It's kind of an inevitable thing, and so having something in place later down the line kind of makes sense to start out a bit earlier on. So I thought I'd just share what kind of program has been recommended for me so far. It's about £65 for both income protection and kind of life cover or critical illness. So let's break those down. So income protection, it's usually based on about 60% of your gross income so far. Now, being freelance, I have like a gross income of what people actually pay me, but then I have business expenses and then I have profit or loss potentially. And so they charge you 60% of your gross, which is really good because many banks, for instance, if they're looking at a loan, will just look at the profit side of things. Assume you're like a cake factory and you're like always, if you earn this, then you always have to spend this kind of thing. So that's good. So 60% of that. And then what that can do is you can take out policy generally for 2 years, 5 years, or until state pension, which is 70 years old. So an example is if I broke both my legs, it would maybe take me like a year, 2 years to get better. So that plan would pay out 60% of what I earn in total, I guess, based on like the last year or last couple of years of income. And then that would basically cover, it's all about covering just general living costs. So it would cover rent, it would cover that kind of thing. It's not to be confused with basically health insurance, which is actually physically paying for your health care. So that would have to be a separate thing. But then you would get paid this anyway. So if you're out of work, break both my legs, can't go to work, or have to do very limited other work, then I can take out this policy. The other thing is the critical illness cover and or death. So that's kind of a one-time payment thing. And then that's £24,000. And then I can either take it out if I get critically ill, take it out just as a like lump sum. And this would also be in conjunction with the income protection. So this is where if you take out both things, you don't necessarily have to use it, but you can only use that payment once. So either critical illness or death. So if you use it for critical illness while you're alive, then essentially the policy is kind of void for if you die. It doesn't, like, they don't pay out anything. So I just thought I'd share that. I don't know if you people out there who have families, maybe that kind of thing, have any income protection. It'd be good to kind of just share stories on that and kind of get the ball rolling on that, because it's kind of a thing that you don't think about. And then obviously if something does happen, yeah, I'm covered pretty much until state pension age. So God forbid if anything really terrible happens, then I'm covered for the next like 40 years, which is pretty insane. So for £65 seems like a pretty good deal. So let me know what you think in the comments down below. And of course, you can always like this video, and I will see you tomorrow.